Good afternoon, everyone. I'm Melanie Leech. I'm Chief Executive of the British Property Federation, and my sole and most enjoyable task is to welcome you all to this webinar this afternoon. Before I'm going to hand over in a moment to the capable hands, more than capable hands of Damian Wild, who's going to chair it. But before I do, on behalf of all of the partners on this webinar, Department for International Trade, Homes England, ourselves, Addison Young and Estates Gazette, you are more than welcome. We've got a stellar panel this afternoon who I'm very keen to hear from. Particularly keen, I think, to hear from, if he doesn't mind me saying so, from Peter Freeman, who I think this is not your first outing in your new role as Chair of Homes England. It must be a very, very early one. So we're delighted to have you with us this afternoon, Peter. And I look forward to hearing from you and from all of the others of our panelists. So without further ado, I will hand over to Damian, if I may.
Thanks, Melanie. Yep, good afternoon, everyone, and welcome to this UK investment webinar. Sorry, I'm delighted to be chairing such an important event at such a critical time. And if you were in any doubt about the importance of the subject matter, and I don't think you would have been, but you will be persuaded by the heavyweight organisations which have come together to stage this session and the stellar panel we have, which Melanie has alluded to. So just briefly and contextually, I'm sure we're all hoping, you're all hoping like me, that we never see as challenging a year as 2020 again. Dealing with COVID has been a massive drain on health, on economic activity and on the public finances. And meanwhile, the end of the Brexit transition period is just a few short weeks away. But with vaccine distribution beginning in not months or weeks, but days and hours, we have every right to feel more optimistic about the near term than felt sensible only very recently. But what long-term investments, changes and opportunities do our cities and regions need to capitalise upon now to position us for success over the coming 20 or 30 years? And what is it that investors are looking for? All of this begs some big questions, but we have a panel well equipped to address them. We have Gavin Winbanks, who is Director of Capital Investment and Entrepreneurship at the Department for International Trade. Peter Freeman, as Melanie said, the new Chair of Homes England. Dr. Nick Axford, Global Head of Research at Avison Young, and Jessica Hardman, Head of European Portfolio Management and UK and Ireland Real Estate Group at DWS Alternatives Global. So welcome everyone, and thank you very much for joining us. And Peter, if I may, can I start with you just to get a few words of context and the introduction? Are you enjoying your new role?
The new role is I think, the hardest I've ever worked, other than the 2 weeks before Floating Argent, when my brother and I did about 10 presentations a day. And since that was pre-Teams and pre-COVID, we had to go from meeting to meeting. I'm now doing 10 meetings a day, but at least I sit in the same chair. So that's easier.
We can see you now.
It's absolutely fascinating. And I'm incredibly impressed by the caliber and commitment of the team at Homes England. And it's been a sort of long walk from starting my first development 40 years ago, which was 5,000 feet in Southampton, to Brindley Place, where I first spoke to the BPF in I think 1995, to King's Cross, and now to Homes England. And it's a terrific mission. And one of the things I'm trying to sort of sell in my time there is the importance of homes being related to jobs and leisure and retail and open space and education, so that I will try and deliver for the Minister as many homes per year as I can, but I will also be trying to deliver a sense that they're part of a community, part of placemaking, part of mixed use.
Okay, and there's a 100-day plan in place. What does success look like at the end of that?
Success probably looks like at the end of that, convincing government, which is obviously the Treasury as well as MHCLG, that long-term goals are as important as short-term goals, and we'll hit both.
Okay, fantastic. Okay, well, let's get down to the webinar proper. I'm sure Peter will come back to some of those points, and I'll come back to some of those points. But I wanted to start by asking each of the panel to set some context, and perhaps set some positive context. We'll get into some of the challenges, and I'm interested in what each of you consider to be the fundamentals that will underpin the UK's success, economic and social, in the years ahead, and how they tally with investor priorities. Jessica, could I start with you?
I guess the context I can bring to this group is to talk about how European and international capital look at the UK today. And I think, look, we have to go back to some long-term fundamentals of what the UK has traditionally offered, and it's offered a safe haven, a very mature marketplace, a very robust governance location for people to place their capital, both in investment in the wider world and of course within the real estate industry as well. And I think those things still stay strong, even though there has been, I'd say from 2016, some bumps along the way at the selection that investors could have within the UK versus in pan-European markets or other global markets as well. So the key things I see from the UK from a sort of high level perspective, we're interested in the residential sector, is be probably happy to hear from Peter's perspective, in the sense that we see the demographic trends of the UK, perhaps a shrinking employment base, pushing up wage growth, pushing up disposable income, but that feeding then through naturally into sectors like residential as well, and how it might help finance the building of new homes into where there is a much shrunken supply line currently. So I think that's an interesting angle. Maybe we'll talk a bit about that a little bit earlier as well. I think it's really important that the industry as a whole is continuing to be invested in, especially around the enterprise of technology companies. I mean, we're a centre of excellence in the UK, in the biomedical area, as well as in the private equity area, and of course finance as well, which is obviously my domain. I think it's important that we continue to invest in these sectors, because these sectors are what makes UK great. It is where the talent is attracted to. What continues to invest in our cities and our urban environments. And so if you don't have, continue to maintain those centre of excellences in industry perspective, then I think it's hard to wrap real estate strategy and investment around that. So that would be a sort of a key area for me to see to continue to develop and attract capital to.
Okay, thank you. And you made a very powerful case for investing in the UK there, but you did tee it up by saying even though there had been bumps on the road lately. I wonder whether, because that case is there, does it just make it harder to persuade others? Do you have to restate that case perhaps?
For sure. So, I mean, the current, we're a few weeks off. I can't say the end of Brexit, because that's not going to be the case, but of maybe more clarity. And I think that's been the problem, actually, when you're encouraging international investment into UK real estate. Brexit has been an abstract risk. It's been hard to grapple, it's been hard to advise around it, because we're still in a slight unknown as to what the real impact will be from an economic and therefore a real estate risk return perspective. And so, when I look across the piece of the investors that we advise, I would say the European investors, those closest to the story, have definitely paused into commercial real estate. A little less so in residential, but that's a smaller but growing institutional class anyway. But for our commercial sectors, I think there's been a real reticence to invest there. And you've seen that really just in real estate pricing alone, that continental European pricing, up until COVID-19 was much stronger on a yield than it was in the UK. I mean, there was a clear differential where the return and the risk profile in Europe, people were harvesting those yields much lower as well. Internationally, when you're looking outside Europe, I think the further you get from the UK, the further, the more the investors sort of look at it in the round. They're looking at long-term investment, and they still think UK is a very solid location for that. So, like I said, what we want in the UK, I guess, is that there is no barriers, there's no bars to investment, and I think further political clarity around Brexit is going to massively help with that.
Okay, thank you. And I was teeing this up as talking about the fundamentals that underpin success, and we've got straight into the challenges, but I take responsibility for that, but I'll try and bring it back. Nick, if I could come to you, into some of those fundamentals, that the positives that are and will continue to draw investors to the UK.
Yes, I think, Jessica hinted at some challenges, but, she did also emphasise the fundamentals that I think domestic and international investors have come to cherish about the UK. Some might seem from the inside somewhat surprising that we talk about sort of political stability as being a key attribute of the UK, given what we've been through in the last few years. But from a macro perspective, it absolutely is the case that the UK is seen as a stable from an economic and a political point of view, the openness and transparency of the market, and the vibrancy of the economy. The fact that we are open for business, the fact that we are open for international capital flows, and the ease of doing business for international capital makes the UK a very attractive prospect from a fundamentals point of view. And I think we're going to come back and talk about the fact that change brings opportunity. Whether you agree or not with a lot of the things that are happening, whether you like them or not, there are some dramatic changes going on at the moment on a global level. There are dramatic changes going on domestically, which I think genuinely are going to reshape the landscape. As Jessica pointed out, once we get past the talking and worrying stage and getting on with the dealing with, responding and growing stage of the new normal, whether that's post-Brexit, post-pandemic or post anything else, I think a lot of those opportunities are going to come to the fore. So I think it can sometimes be hard to see that longer term, bigger picture objectives that Peter was referring to. But I think they're very much there. And I think that, next year could well be a period where we can start focusing back on those a bit more.
And we saw, didn't we, with as soon as the vaccine news has got more and more positive, how the stock market has responded and how real estate related and retail and leisure stocks have responded, particularly positively, Nick, which shows how quickly a dent to confidence can be turned around. Are you seeing in that in the investor conversations that you're having?
To an extent. I mean, I think that the stock market is often a better gauge of investor sentiment than it is of some other things. But you're absolutely right. The change in sentiment was very, very marked. I mean, ultimately, economics is all about confidence. None of us know exactly what is going to happen. And therefore, having a positive outlook and a belief that the opportunities are there and can be realized, rather than a very, very defensive mindset, is clearly absolutely crucial. And yeah, the recent announcements about the vaccine, which I think have gone from conceptual announcements that we've got something we think is going to get approval to news that the lorry is coming under the channel as we speak, has happened extraordinarily quickly. And I think that will undoubtedly feed through potentially into investor sentiment. I think also into occupier sentiment, which has been the key challenge over the recent months.
Okay, thank you. And Gavin, to bring you in, if I think back to Q1 going into MIPIM and all of the activity was planned and the conversations that were expected around there, the year has panned out somewhat differently, perhaps, to the one that you expected. But have the fundamentals that you continue to use to persuade overseas investors continued to be the same, or have they altered?
And so great to be here, Damian, and thanks for the opportunity to speak. I think what we're seeing is a continued investor conversations, but actually some of the things that we're articulating as the attractiveness of the UK has slightly shifted. So some of the conversations that we're having around our research and innovation capabilities, the top universities in the world and the associated capabilities, as well as our technical and technological capabilities, and the need to kind of roll that out at scale and look at and a significant piece of work has gone on across government around assessing supply chains over an extended period of time. So having both life sciences capabilities and making sure that those capabilities stay in the UK, as well as also ensuring that we truly reap the benefits of the cluster effect. I was talking to the people at the World Intellectual Property Organization the other day on their Global Innovation Index. And if you look at the capabilities that exist in kind of Oxford and Cambridge alone, relative to population, they are just such amazing hubs of skills. And you could kind of, there are cities all across the country that have those skills and capabilities. How we package up life sciences, how we package up technological capabilities in order to attract advanced manufacturing has probably been something that we've always done, but the bleed into real estate and the need to kind of create coherent offers and opportunities around these sectors has been something that I think we've seen a real shift in, and the interest both from the sovereign wealth funds and pension funds that we've been having in conversations with in the international markets, as well as needing to kind of really demonstrate how we support and land those investors, as well as having a coherent land strategy has been something, would be one of the shifts beyond the rule of law, the openness of the market. These are some of the shifts that I've probably witnessed over the last 6 to 9 months.
Okay, that's interesting. Talent, skills, and the knowledge of economy have always been there, but it sounds like they've moved up the list, and certainly that connection that those within real estate have always claimed is starting to become better understood, which is encouraging.
Yeah, most definitely. I think I think I was talking to, I wouldn't want to kind of not give someone credit, talking to the team at JLL around innovation real estate, which I thought was a really interesting way of articulating, rather than trying to, how do we articulate innovation real estate to international investors when the UK is so ripe with innovation and has so many strengths and capabilities that beyond some of the challenges, it's actually really exciting to conceptualize how we promote this in a coherent fashion over the coming months.
Okay, great. And one member of the audience has spotted this, but I should tell everyone there is a Q&A button at the bottom. So if you do want to ask a question in the panel, put it in there and I'll put it to the panel. So Peter, to come back to you, there's much there that that chimes with what you were saying. You're undoubtedly thinking that demographics present a great opportunity, and that connection between real estate and the economic and social prosperity of the UK is very much apparent, and perhaps particularly in residential.
I mean, I'd absolutely echo the importance of the cultural, educational, medical aspects of England. I might have an advert for the British Tourism Board, but I think when you throw in what we have in the National Trust and what we have in the Royal Opera House and so on, it is an extraordinary place to live, and it is still, if you're an American banker, the post you probably most want is London. If you're an ambassador, the post you most want are London, Washington, and Paris. So it is a very special place, and we have been transparent and had a legal system that works for longer. And so when we talk about stability, there's kind of stability with a big S and a small s. And the big S, that we continue to have a decent legal and educational system, overrides everything. And other than a brief moment, a Corbyn moment, my entire business career has been within a stable overall economy. We do need more stability on policy, and particularly I think on planning. And if there's an aspect of UK PLC that lets down both the property industry and international investment and growth, it is maybe planning. I think that COVID and Zoom and Teams may actually do something important for the country and for where property investors go. When I started, big institutions would still own buildings in small towns or medium-sized towns like Southampton or Leicester. And increasingly institutions said if it wasn't London, or maybe Manchester or Birmingham or Glasgow or Edinburgh, why bother? I actually think Homes England has just advertised a job in their company secretarial department. I was talking to the company secretary and I said, where have you advertised it? And she said, I've advertised it in 6 of our 10 offices. I don't mind whether the person works from Newcastle or Bristol or Coventry or London. They'll have to come into either Coventry or London as a kind of head office thing once a month, but no more. And I think that we may actually see some renewal of the medium-sized towns. And if I was betting, I actually think that overall there will be less offices in London in 15 or 20 years than now. Not hugely less, 15 or 20% less, and they will be the worst ones that go and become converted. And I think there will be more offices again in places like Leicester and Coventry or Swindon.
Very interesting. Nick, are those the sorts of conversations that you're having? Because there are positive implications there for levelling up, to borrow a phrase, but it presents some challenging questions to big cities, principally London.
Yeah, absolutely. They're the conversations that we have, that we're having. I completely agree with Peter, I have to say. I think that it's hard to see exactly how the picture is going to pan out. But if you look at the underlying trends, you know, just focusing on the office sector, office employment is facing sort of retail's equivalent of an e-commerce moment. That we have seen a transformation in the way the fundamental stuff that we do is being done. And what's really interesting is a number of the big occupiers that we're talking to their heads of corporate real estate, they're talking about the use of flexible office strategies of activity-based employment and reconfiguring the whole way in which the big organization approaches its portfolio and its use of office space. The challenge that they've had is not making it work financially. They don't believe it's making it work operationally. It's change management. They have had radical ideas that they've had kind of put on hold because they can't see the way to get the change management, to get the organization to shift its thinking enough to take advantage of these opportunities. And they see what we're going through, what we're hopefully coming to the end of the last 9 months, as a Control-Alt-Delete moment, because things that were unthinkable from a change management point of view last January now look like actually really quite a sensible response to changing thinking about patterns of work, how to attract talent, what the role of the workplace is, and recognizing that now when we all get up in the morning, we don't kind of down a cup of coffee, get on the train and start thinking about what we're going to do when we hit our desk. You get up in the morning and think, right, well, am I going into the office or not? And that's a very real choice that we're not suddenly going to default back to. So that poses huge challenges around organizations thinking about the role of the office, which I think offers really exciting opportunities right the way across the piece, some challenges as well. But I completely agree with Peter. I think it also raises some opportunities and go beyond the office sector around what the economic geography of the UK is going to look like over the next 5 to 10 years. And I think that's really exciting.
And just to latch on to one perhaps smaller point you made there, that offices are facing their equivalent of retail's e-commerce moment, which caused the slow death of many retailers. And unfortunately, we've seen some of those come to fruition this week, replaced by new providers as yet who weren't even heard of back then. Do you see a very direct parallel there, that a lot of the office landlords of the future aren't even born yet?
I do, in the sense that I think the world of in which we live and work and operate is almost unrecognizable in a lot of very fundamental respects, almost to what it was 20 years ago, let alone what it was 30 or 40 years ago. Just think of the pace of change, and if anything, that's accelerating. And I think what what the e-commerce issue has highlighted is that, and the terrible announcements, which do have very, very real impacts for so many people, and I don't in any way want to belittle that, because it's a direct human impact. But what the announcements from retail this week show is, no matter how good you are today, if you are not reading the signs, if you are not really thinking about some of these fundamental underlying drivers, and if you believe that you have a kind of God-given right to exist and that things are going to carry on as they are, that's almost the moment at which the death starts. I absolutely passionately believe in places. I'm a massive fan of Peter's and the work that he does, because they don't build great buildings, they build great places, and they recognize the different contributions that different activities make to those places. And I happen to think that in 50 years' time, there will still be physical retail. People will still want to do that. We don't know exactly what it looks like yet, but the people, whether they're landlords or retailers or operators, there will be people who survive and there will be people who don't. And I think the same is true in the office sector. There are going to be people who do respond, and there will be business models that are found to be flawed for the time. And that is, I'm afraid, a part of the world that we now live in.
I think a slight gloss on the retail thing. I think a lot of the retail insolvencies are actually about the balance sheet and the leverage in the business. There were too many kind of venture capital buyouts of retail business and offshore landlords, not thinking of anybody in particular. And that softened it up, as well as having e-commerce. And I think that the smart retailers who change their fashions the best, who are in locations where there is a sense of place, who give a sense of service or adventure or experience, probably can survive. But the ones where it is literally easier to order it, there is no case.
And often diversifying into other sectors, Peter, like residential, for instance.
Sorry, office owners.
Retailers, John Lewis, looking at residential offers around some of its sites.
Huh.
Okay, Jessica, do you see that degree of change as well? And does that affect nearer term investment strategies?
Yeah, we certainly do think there will be some fundamental changes to the office sector. The one thing I would say, it is still theoretical. We're living through, we've just come out of the second lockdown. We've got, we'll have 9 months under our belt of working from home. Personally, I'm quite interested and pleased to go back to the office at some point soon, because I do miss the collaboration of the team. And so what does that look like over a long-term office occupation? I think still we need more information. We need to understand how corporate real estate teams are going to start to redesign the offices. So I'm probably not so far ahead as some of the speakers as to what does that actually look like. I think there needs to be a lot more trial and testing of that model. And I guess I say that because to convert stock, and let's not forget that the majority of the office universe is what I would call commodity stock, everyday offices. They're not the grade A, highly sustainable offices. They're not in the placemaking locations like Argent schemes, like where we invest in Stratford. There are single buildings in a row of office buildings, maybe in an urban location, maybe in a business park location. And so the investment it's going to require to turn those into the sort of hospitality feel office is significant. And layered upon that is also our responsibility of being environmentally friendly, because that's another huge piece of investors' consideration currently. And we're being driven by our own investors, by regulation, by our tenants to create really great quality green stock. And so if you start to tear down multiple buildings or have to put in so much investment to turn them into these green and healthy buildings, there isn't enough capital available to do that. So, there's just so many things to consider, so many variables. I'm probably a little bit of step by step, what's the evolution of the office sector? But I do agree that over the medium to long term, we'll look back in 10 to 15 years time and go, it has changed. It has fundamentally changed. We are now housed in a different environment where we are. And I do think, I agree with Nick, actually, the examples of great placemaking, for me, feels like that's where my heart lies. I think that is definitely the resilient model. I like to work in an environment where I can shop and go for coffee and maybe have some evening entertainment. And frankly, if I could live near it too, that would probably just save me a huge amount of time. I've realized that because I don't commute all the time now. So, these sort of things are the things that I think that does make my life easier, and anything for an easy life and a great environment, I think, is probably what we're all naturally striving for.
More and more, I think, clapping from sure, here's came in from the audience as well. Gavin, I wonder that placemaking point in place is interesting, and overseas investors all but disappeared in Q2, but came back in Q3 to an encouraging degree. And I just wonder, you alluded to some of the ways in which that conversation had changed. I wonder whether the conversation around place had changed as well, because we're all you know, as Jessica says, you know, we're all enjoying having this commuting time to devote to knitting or, you know, baking sourdough, whatever.
Was that meant to be referenced to me?
I didn't
like
know
a knitter.
It was me, Jessica. he knows I'm a dab hand with the knitting.
I wish
needle.
I was crafty. I'm not.
I've been doing too much baking and eating, so perhaps I should take up knitting. But I wonder if the nature of place has changed in those conversations as well. Whether overseas investors, you know, are perhaps interested in locations that they might not have mentioned before.
So I think there's kind of both a policy angle to this and then a kind of like an investor angle. And I think there is very much an imperative within government to support the levelling up agenda, Damian. So kind of initiatives around like the national infrastructure strategy and talking about an economic campus in the north of England will be a kind of some of what Jessica was just referring to in terms of proximity to workplace and the opportunity to kind of socialise and do all of that. I think part of what the places for growth work being led out of the Cabinet Office, but also things like an economic campus in the north try and play to that. And I think there's probably a recognition from a whole range of people, particularly given the volume of people that are looking for more space and a higher quality of life. I've lived in a basement flat in Hackney for a large chunk of lockdown, hence my desire to get back into the office. And there is very much a desire for people to explore more space, and therefore I think this is a real opportunity for cities outside of London in order to kind of be really marking out their territory. And we have an event where we bring together international investors with the cities, and we heard really compelling stories from Bristol, Belfast, and Liverpool, and actually kind of tying into the digital conversation that we're having. We're able to get more people into that forum than what we were able to do previously, and actually showcase the opportunities that exist in different cities. And I think that there is genuinely a willingness in the conversations that we're having, but also a recognition of the importance of international capital and private capital to support the ambitions of different cities, so who have great offices it is, but actually to bring the international investor into them. And I think an increasing sophistication and quality of the offer for those international investors. And we certainly saw that in some of the conversations that took place immediately following our Investing into Cities event, as well as the follow-up. So positive, and I think actually one of the beneficiaries of the pandemic, if indeed there is a beneficiary, and you kind of know that I kind of use that in that context, are the cities that have great qualities of life and the ability to attract foreign investors, both to locate their companies and offers there, as well as having the stock in order to make sure that they are compelling to create these offices. So yeah, it's a different kind of conversation, and we're seeing probably more interest in it aligned with government policy, Damian.
That's really interesting. And Peter, I wonder if it goes further than that, not just a balancing of the economy from south to north, but a sort of rebalancing between towns and cities, because many people work in cities and live in towns, but we're probably getting a bit more used to, you know, strolling down to a local high street and having that coffee or that evening entertainment. And that feels like it might be on the Homes England agenda.
I don't know how far it's on the agenda yet, and it sort of ties into local government and planning. I mean, one of the things about placemaking is if there's a catalyst, it can sort of spring, and then lots of separate landowners, building owners can sort of build on it. So at Brindley Place, when we started, Broad Street was pretty awful. And by the time we'd finished Broad Street, you know, probably 50 different investors, developers, whatever you want to call them, had completely transformed their own buildings on Broad Street. The question is how big does the initial kernel have to be? And my suspicion is that what a lot of smaller towns need is for the local authority, if necessary, to kind of start CPOing the centre of the high street, pedestrianise it, and to make the nugget or kernel or whatever it is, the first seed, happen. I think there's also, if I was putting my sort of investor hat on, I think sort of the Belfasts of this world could come good because they have meaningful critical mass. But if I was just wearing a kind of office investor hat, I'm actually a director and shareholder in an IT business based in Kirkcuddy. Kirkcuddy is the home of Adam Smith, and it's in Fife. And we bought our own building about 15 years ago, which was brand new. It's worth less than construction costs now, because Fife County Council is happy to build a new building on land that's free every 3 years, and there isn't demand for one every 3 years. So, you know, you've got to have enough critical mass and some constraint on land supply to drive investor value. Okay, thank you. And Nick, and you talked about the value of place. Do you see a renaissance for towns?
I certainly see the opportunity. I mean, the comment that you made about, you know, people spending a lot of time closer to home. I think also if you look at, going back to the point about retail, if you look at what a lot of people are looking for in retail, and indeed in office, it's about experience. It's about something that's different. You know, as wonderful as a lot of shopping centres are, it's difficult to be wonderful if it's got exactly the same row of multinational fascias that you get in pretty much every major shopping centre around the world. And if you then think about, you know, some of the fantastic, it's easy to hark back to the historic ones, but a Winchester or a Windsor, you know, a high street that is full of culture, full of character. Think of different neighbourhoods in New York that have their own distinct, you know, characteristics. And I think that selectively, there is absolutely the opportunity to take advantage of these trends in certain circumstances to kind of rebuild that sense of neighbourhood, that sense of local, which doesn't have a right to exist, but which, as Peter said, you know, once you get a catalyst, once you get something going, you know, naturally, we will see people building on that opportunity because they're looking for something other than a core investment in the middle of a big city, which frankly, you know, no matter how great it is, those returns are going to be under pressure over the next few years, simply because there's going to be a lot of capital looking to access it. And funnily enough, I was talking with Jessica about a scheme that DWS have got in Enfield, which I think is about, I know there may well be particular characteristics of that location and scheme that lend itself, but it's still really exciting to see what's regarded, you know, a mainstream investor looking at taking a shopping centre asset and really transforming it through the use of residential, leisure, and reimagining what the role of a great big lump of real estate in the middle of a community can look like. And who knows what that could spark around other people, other landowners saying, you know what, if that's happening, maybe there's something that I can do with my asset that can build on that. So it's not just going to happen, and there are plenty of places where I think there's also Peter hit the nail on there where local intervention and government funding is going to be needed to kind of kickstart the process, because there are some big challenges and socioeconomic challenges that the real estate sector can't solve on their own. But equally, there are opportunities that I think, you know, like Enfield, where we'll start to see some exciting things happening.
Okay, I want to come back to some of those public sector triggers that might be needed or certainly wanted. But just building on that last point from Nick, Jessica, in conversations that I've had with investors recently, it seems that the headline considerations have shifted perhaps from geographical and sectoral purely into ESG, from sustainability to community engagement. That sounds like an example where community engagement is vital. But have they moved up the agenda, and have they supplanted some of the other considerations we've been talking about?
I think it's really astute of you to identify that we are now investing around major themes, and it doesn't matter so much what country we're in. We're investing along themes, and I think residential theme has massively moved up the investor priority list. It's still a very high barrier market comparison to me building a logistics unit, for sure. So you need certain skills within your department, or you need to team with specialists to be able to do that. But I think it's definitely, high on the agenda now to develop more AUM, more assets under management in that sector. But what does go hand in hand with that is our responsibility about social improvement. I don't think you can invest in residential if you do not care about who the person you're housing, because it is the most personal asset class. It's the most personal piece of real estate that someone like DWS can provide. And so we have to take that charge with a higher amount of responsibility. So for us, the majority of our investments across Europe are in affordable accommodation. And what I mean by that is mass market accommodation, housing the biggest part of any population. And we're just starting our pathway in the UK. So we have developed a large portfolio in and around Dublin. And that is single family and multi-family, so individual homes with gardens for rent, as well as the apartment blocks as well. And we would like to transfer our knowledge into the UK. And you might have just asked how come you're so big in the UK but you didn't start having a big UK portfolio? We're a euro denominated outfit, so hedging costs sometimes just cut into the total return you can get from the UK market when it was in its infancy stage. So that's just to clarify that, because people always ask me that question: how come you started with Dublin? So I think we take our social responsibility very, very clearly. On the collaboration side, it's actually quite interesting that we do like urban locations, but we really like suburban locations as well. And that was before COVID-19 happened, but now COVID-19 has come. I'm going to sort of say, hey, aren't we clever? Because actually people do want more space, but they still want to be well connected. We will move back to being a transport orientated nation in the UK. We will go back on the trains. We will go back on the buses. We are heavily dependent on that across the UK. So we just have to we'll get back to that stage again. So, investing in great suburban locations that has the doctors, the library, the great schools, in walking distance or on a short bus ride, in great high quality accommodation, but where there is open space and we call it the percentage of blue and green space per development area, is going to be really key for us. I don't think we'll be the only investors seeking that, but to develop those locations, most often on brown land that might have been a manufacturing use previously, is going to require a huge amount of collaboration with public bodies, with other local organizations and people stakeholders to get that right. And I think it's important that all of those stakeholders understand what the end game is, understand the financials and the technical ability to do that. Maybe that's where relationships have broken down in the past, because I think the end game is really great quality accommodation in really healthy environments that are affordable. And if we get all those things right, I think we have a really prosperous residential and semi-urban locations.
Do you assume, perhaps this doesn't apply to assets that start out as residential, but with other assets, do you assume now that they have a fixed use over their life, or do you look, to borrow a phrase from one of our listeners, the transformability of assets?
Well, it's interesting. As an investor, you're always looking for optionality, because nothing is ever fixed. And if we invest in something that only has one purpose, then that creates some inherent risk that if that one purpose is removed, then your value has probably decreased or no longer is relevant. So I think in any investment case, we would always consider optionality. I just take a little bit around like the logistics market. You might say that's a very simple shed. It's very easy to build. It's just have to buy the great land, etc. And I guess my argument to that is actually I think our logistics platforms at the moment are turning into one of the highest quality technology centers that we have. They might even say they have more technology in than offices. That's a real big change and a real different way of looking at that sector. And I think you can look at that, how sectors have changed through the use of technology pretty much across the piece. Even I'm really interested in green building. You get back in residential, how can we make smart houses? I think that's great. It's a niche area for a big investor like us, but there will be innovators in that. Again, they need to have those components to be flexible for what the next user wants to use those for. So for me, optionality means I've lowered my risk. And if I get the same return for that, then I take that every day of the week.
Okay, for transformability, read optionality. So we've got a couple of questions that have come in on planning and on business rates, and tempting though it is to give these to Gavin and Peter, I will spare them, and I'll put these to you, Nick. What do you think is the likely impact of the draft white paper on planning from an investment perspective?
I think that the point that Peter made about the sort of the reliability and the speed of the planning system is well made, and I think that Jessica also made the point that what investors want is certainty. I think that anything that brings greater clarity, certainty, and speed to the planning system is to be welcomed. But I do think as well that the two other points that have been raised about making successful places and successful investments are firstly the relationship with the community. We are, I think, finally recognizing that the idea that someone knows best and that we can make a decision. This is the right scheme. This is the right development to fit in this location. That doesn't fully embed within that the wants and needs of the local community. Not that that's the only consideration either, but it has to be taken into account. That's absolutely key. And the other is flexibility and optionality. Everything that we've been talking about is how rapidly the world is changing. The real estate sector needs to be able to respond to that. And the planning system needs to accommodate the fact that needs change. And so, introducing greater flexibility, I think, is also hugely important.
And do these proposed changes take us closer to a speedier and more certain planning regime that offers that flexibility, Nick?
That's a difficult question, because it implies that it is just the structure of the planning system rather than the operation of it that's the problem and the challenge. And so I think potentially, but I think also how the system gets implemented is as important as the actual structures involved.
Okay, thank you. And Gavin, another question here on tech, actually. And do you feel that sovereign wealth funds and pension funds get what the prop tech sector can offer? And I suppose, defining whether they get it is difficult, but does it crop up in conversations? And does the, a leading position that we've taken in that sector help some of the conversations that you've had?
So I think referencing kind of BPF property, BPF research, I think there is work to be done to better articulate the offer in its totality. But we know that that the UK is kind of an innovator within, particularly within Europe, and actually the more kind of VC funding that we can be getting into tech in the UK. So we've got an amazing story in terms of attracting not only innovative companies to locate here in the UK, but also in terms of VC funding. Building out that capability is absolutely key. We know that sovereign wealth funds are taking stakes in a variety of different tech companies, and the broader part of what my team does beyond the kind of large capital side is work with growth capital investors who are looking at these opportunities. So I think yes, there is an understanding with the large scale investors. Could we be doing more potentially to kind of raise the profile of the company seeking investment? And I think one of the challenges we've also got is actually not just kind of enabling people that are innovating and creating prop tech companies to actually stay within their markets domestically, rather than needing to come to London in order to find that capital. So trying to do more within my team to make sure that companies that have innovations that might have set up in Newcastle or might be set up in Leeds don't then up sticks and kind of move to London in order to be closer to the investor. That actually what we need to be doing more of as a country is making sure that that innovation stays within that community, and we do more to support the investors to kind of be what opportunities exist within PropTech.
Okay, thank you. None of these questions are easy, I'm pleased to say. So Jessica, here's one for you. 2 questions. What's going to happen to all the empty retail units arising from the recent spate of insolvencies? And what would be the impact on rents, particularly that move to turnover rents?
Oh, well, if I know what's going to happen to all the retail units, I think someone paid me a lot more for my services, because clearly there's going to be a mismatch between demand and supply there. And we talked a bit before, haven't we, about stakeholder investment, and gosh, that's going to need it somewhat to find solutions. Now, we've seen multiple different ideas. Nick, you referred to our investment in town centres. We don't do a lot of town centre investing, actually. Traditionally it has been a very long-term, hard work place to drive revenues, I think, because of the multiple stakeholders. But I think the work between public and private sector to solve the retail issue is going to have to be seriously efficient and create results. Otherwise, we're going to see vacant shops for many years to come. So sorry, I don't have a solution for that. I'm just going to clarify that we are not a significant retail investor in the UK. In fact, we're not a significant retail investor across the piece. So I feel there is better people that have that challenge more appropriately in front of them than I do to answer that question. Maybe I can pass that to Nick.
That's very generous. I'll give you the second half of the question, Nick. Do you think this will reverse that drive to turnover rents or slow it?
No, I think if you look in the retail environment, if you look at the shopping centre, it's long been recognised that actually, far from being adversarial, in reality, the interests of the shopping centre owner and the shopping centre operator and the retail tenants are completely aligned. It's all around creating an environment and a place that brings consumers in through the door and then encourages them to spend time and spend money. And I think there are other examples of high street environments where sort of town centre associations have started to take the same sort of approach, thinking about the whole retail environment and the role of the management of that environment, whether that's private sector or typically local authority, alongside the individual retailers. And I think from a landlord's point of view, we have seen through the crisis, although there's been all sorts of headlines and certain parts of the media delight in highlighting examples of conflict or situations which are confrontational. We're well aware many landlords who have businesses to run, they have obligations of their own, they have stakeholders of their own who the same as retailers, have been extremely accommodating in trying to understand the challenges faced by the retailers and trying to put in place compromise agreements, because they understand better than everybody that a retailer that's gone bust isn't going to pay any rent, and it's not going to be easy to find a replacement. So I think a shift to turnover rents kind of is a fairly sort of inevitable process of aligning the interests of landlords and occupiers. An impact on rents, seems inevitable, but in exactly the same way as other areas of renewal, as values adjust and as rents decline, that space then is brought into play for other alternative uses that maybe can't compete with the rents of a thriving high street retail unit. But if that's not what you've got, other occupiers can step in. I think that we're going to see logistics, local, last mile, last hour logistics play is absolutely going to step in, funnily enough, fulfilling the same sort of role as retail, but that last step before delivery to the consumer. The sort of the co-working and flex office operations, we're already seeing some of those sorts of things springing up to take advantage of gaps in the high street and provide a work near home option to complement the commute into the city centre. So, I think if you're looking at it narrowly, are we going to see an impact on high street rents over the next 12 to 24 months? Yeah, almost certainly. But, that's part of the evolution and the renewal, and there will be some people who suffer short term from that, but there will be other people looking to take advantage of it.
Okay, thank you. And just before I bring Peter in, I'll take a yes or no on this one. Nick, is this a moment the government can grasp to bring in the fundamental business rates reform that has been continually promised?
Yes.
Thank you. Peter, if you're an external investor, what and where would you invest? Are there particular parts of the country where you see exciting opportunities from your new perch, for instance?
I mean, it's probably partly a question of lot size, because you have liquidity within markets, both for the occupiers and the investment lot size. So, if you want to put out 50 million at a go, realistically, you're going to stick to the kind of 6 or so major cities. If you want to put out 5 million a go, you might go down to many more. I think that one of the things I've liked listening to sort of Jessica and Nick talking is how much sort of ESG, CSR, environmental, community placemaking things have come in. And in case anybody hadn't noticed, I'm an optimist. And so I absolutely do believe that overall mankind is progressing, and overall business gets smarter. And part of getting smarter is that we are more interested in wider stakeholders. Stakeholders isn't just a kind of cliche. We're concerned about our staff, we're concerned about our customers, we're concerned about our suppliers, we're concerned about the environment. So I have a kind of holistic sense that Britain will become a bit less London-centred, but it will still be an extraordinary centre because of its universities and schools and shops and the Bank of England and government and whatever. That I would be pretty comfortable predicting growth in not only the kind of top 6 provincial towns, the next kind of 15 or 20 on scale. And beyond that, I think it will be down partly to how much they have historic green spaces because they're Harrogate or Buxton, or they've got beautiful bits of, potentially beautiful bits of canal, which a lot of them do because their industry was built where the canals were, or vice versa. And how much the city fathers get hold of them and make them happen. I think you really can transform a city if you set out to, but you can't transform it unless you control a good chunk of it, which means the city fathers.
And do you think, Peter, having sat on both sides of the fence now, that the public sector perhaps underestimates how it can work with the private sector effectively to trigger that? I think we've got 2 good examples on the call today. DIT forging relationships around the world, and Homes England acting as that trigger for investment over here. But do you think the wider public sector can do more in collaborating with the private sector?
Probably. I mean, one of the things that's interesting in the way Oakley has structured Homes England over the last 18 months is it has a central directorate, markets, partners and places, which job is to sort of not just do deals or help Homes England put out loans or grants, but sort of network and bring together landowners, councils, developers, occupiers. And I think that's something, Gavin's team is probably doing it between finance and businesses, that the government could do a lot more of.
If I could jump in there, Damian, I think probably there's a lot more that goes on in terms of that collaboration than what people are necessarily aware of. But I also kind of think that the pandemic has created an urgency and a need for that collaboration to take place at scale. And I think with things like the announcement of the Office for Investment and the raft of other opportunities that have come out around the infrastructure strategy, that the need for public and private to work in partnership is absolutely paramount. And I think we're going to see more of it rather than less.
Okay, well, that's a great note to end on. I'm afraid we're out of time. Thank you all for joining the call today. Thank you for your questions as well. I hope I got through all of those, and thank you for making them so challenging for our panel as well. And thank you especially to our panelists, and I hope everyone has a good afternoon.